record on my computer. All right, how's everybody doing? I'm United with Nexus Investments LLC. We're hosting this live conference. I'm here as the co-host is Chris Umstead, or Cumsteadt, as y'all probably on the chat laughing at him, his name right. So anyways, we got a few topics we're gonna cover. Now let me go over those topics real quick. Go back over to the Discord. All right, so I'm gonna talk about the importance of delta. I'm gonna talk about volume and price action. I'm gonna talk about the valuations of our contracts. I'm gonna talk about buying in the money options and out of money options, because when I first started to learn about options, that's the hardest thing to learn is what contract do I want to buy and how do I do it? Because anybody can tell you, hey, Amazon is going up, buy a call. Well, then you're like, well, what the hell does that mean? What do I do? So first of all, you got to know what expiration you want to do. You got to know what strike you're going to choose, and you got to know what premium you're going to choose. And then when you choose a premium, you also have to consider the spread. And that's the price between the bid price and the ask price. So let me go ahead and share. This right here is Thinkorswim. It's the trading platform that is hosted by TD Ameritrade. So majority of you guys, the new traders, are using Robinhood. And I use Robinhood as my first trading platform to learn options. And I think that's the very first platform you should learn until you get so sick and tired of pattern day trading, which is you only can trade 3 day trades within a 5-day period. So once you get tired and sick and tired of that and you start losing money because you can't make a 4th day trade or you're gonna get banned, then it's time to move on. So I tried Tastyworks, which is another platform. I tried TD Ameritrade. I tried TradeStation because that's what Nexus Master likes. Ultimately, I like TD Ameritrade because it has a trading platform and it has a charting platform. The interface of the app, because I'm always on the go, I have a 9-to-5 job, and I'm always trying to trade in between and chat and talk and everything like that. So this is what I highly recommend. But now I have Amazon on because that's what I traded on, over the week. And I realized a lot of things trading between higher liquid stocks like Amazon that are very expensive versus smaller stocks that move a little bit slower, like Square, because I'm going to comparison between trading Amazon and trading Square. So like for Amazon, if you know that you want to trade and you want to buy a call, this is the side you want to buy. It's labeled calls. You have from this side, and this is if you want to buy a put. So obviously for the new, buying a call means that you think the price of the stock is going to go up, and buying a put means that the price is going to go down. And the whole thing about options is that you're buying an options contract. So you're not actually buying the price of Amazon, which is currently $2,079 per share. I mean, who really has that money unless you're rich, right? So, sorry, I was looking at the chat. But options has provided us a way to invest in Amazon without actually owning the stock. So, in theory, you're buying a contract and you're owning temporarily like 100 shares of a stock for a certain contract price. You have to understand that the contract price, they have values. And this is the big problem, is that what contract price to actually buy. So as you can see here, you have the different expiration dates. Now there's different strategies people use. Nexus Master likes to buy contracts that are 5 weeks out and more because he likes to hold on to contracts for long periods of time because his trading style is a swing trader. The reason why his trading style is a swing trader is because he has other business ventures and other lifestyle that makes him busy. Now, if you're the type of trader where you have all the time in the world and you can always be on your computer because maybe you have a desk job, you have time, or you're a stay-at-home, family member, you could prefer to trade scalping. So with scalping, you can get in and out. As you can see, a lot of the traders in our group, We get in, we're in for 5-10 minutes, and we hop out, and we made all these exponential gains, and it's like, it's ridiculous. And, you know, everybody's thinking to yourself like, who the hell makes this type of money, you know? But it's happening. It's happening. And the people that are not making money is who I'm trying to target in this audience today. And I want to help everybody. And Chris, he wants to help everybody figure out and get on our page on how to trade. Now, in Nexus Trading Room, we have a bunch of channels. And the reason why there's so many channels because it's just we built upon it over time, and people have requested certain types of trading styles. And we try to cater to all types of trading styles. That's why we have scalp trades, swing trades, day trades, predictive signals, long-term. So whatever your preference is, stick to that, perfect your craft, and own that shit, you know? And stop spreading yourself thin by trying to do a little bit of predictive, a little bit of swing, a little bit of scalp. You know, by wearing yourself thin, you cannot become an expert, you know? It's like a jack of all trades, but really, you know a little bit about everything instead of just knowing one single strategy and just running with it and making your moves. So if you like a particular trader in there, you know, pick their brain and figure out. We're all a trading family, and we're all trying to figure out how to get paid. So when it comes to scalping, it really doesn't matter about your contract in my mind, because as long as you keep it as scalping. Now, if you have to have a certain set of rules, if you're scalping and the price is moving up and it reverses on you, you got to know when to cut losses and swallow your pride, get out, and then look for a better position. You know, like turning a scalp into a swing trade is going to hurt you. So for instance, and this is what I'm going to talk about, Delta. And Delta, I'm learning from Cumsteadt a lot about Delta, because I used to trade with him a few times over the 2 weeks. And I could not figure out how he was making more money than me. You know, either he's lasting his trade longer, but he would be out and I would still be in. But the reason why he was making a lot more money to me, and correct me if I'm wrong, Chris, but it's because he was choosing in the money options, which gave him a higher amount of delta. So the delta is how much you're gonna make per dollar the stock moves. So if you choose this option right here, which is this is the strike, this is the expiration field, 14th February, and you can do drop downs 21 February and on. As you go further in the expirations, the contracts become more expensive, but also it's less risk. So you have to weigh your risk reward options. So for 14 February for scalping, in the money is this purple range, out of the money is this black range. So if you want to choose the money option, that means that the price you're choosing to strike is $2,077.50. Now, to be in the money, choose this option means that the price is above the current contract that you're choosing. And then the bid price is what the price ranges you can get. So you can choose to put in a bid order for $25.85. You multiply that by 100, it's $2,505. Use the ask price, which the other person who's selling the contract to you is asking for that price for you to buy that. So if you want that option now because the price is moving, then you choose that option. Now here's Delta. Now these fields here on TOS, you can change them out to be whatever you want. Usually I have volume and open interest here, but for today I have Delta on here, and I also have Delta on my TOS app. But you can see here that you're making 52 cents for every dollar move. So I've already did some examples of the trades on Amazon. I'm gonna switch to this folder here, okay? Can y'all see my Amazon calculations?
Yep, we can.
Yes.
Okay. So here's the TOS app. You can see how like nice and friendly it is. So say that I'm choosing this 2077.5 strike price, and the delta is 52 cents. And you can see that the more delta you have, that the more in the money option you choose, the higher delta you'll get, means that the higher amount you'll get per dollar move on Amazon. So if it moves $20 on Amazon, you're gonna get $52 times 20, okay? So if you look at the calculations on that, how do I go backwards? So Amazon's current price is $2,079. If your target price is $2,099, that's a $20 move. The delta earned per $1 option is 52 cents. And as you can see, we chose 52 cents on delta. Well, a $20 move times 52 cents is a $10.40 earned. And if you multiply by 100, that's $1,040 you made on that contract. So if you want to calculate how much you potentially can make, that's how you calculate it. Because I've always spent so much time trying to figure out, like, how much can I really make if the stock price, hits a certain price? Like, you never know, because all you're doing, if you're a chartist, you're here, you're looking at the charts. And that's what we're doing. We're trading these charts right here. We're trading a 5 minute and 1 minute. So once we see a breakout to the upside, you got to figure out, like, hey, when I'm going to get out, and the price is moving. Whatever you decide to get out at, you sell and you look out, like, okay, I made that. But honestly, if you use these calculations, you can know how to calculate how much you're going to make. Now, the reason why I'm talking to you about Amazon is because I'm going to compare it to Square. As you can see here, that on Friday, this price went to peak price for the morning. It went 2.85%. Now, Square, being a smaller stock with the options price is cheaper, is more appealing to those who have less capital. Those who trade Amazon have a crap ton of capital. And those who like to choose Square have a little bit of capital. I'm going to show you the differences when you actually trade. You can notice that these two spiked almost the same, 2.85%. Square is 2.58%. So how much is everybody making? Well, I just showed you Amazon. If you trade $20 from this point to this point, well, actually it's this point to this point here, because we sold at 277, right? Actually 1.83. 1.83. So that's actually less percentage that I actually got out than trading Square up to this highest point if I'm that good. So I made $1,040 hypothetically. This is just like a scenario. I made $1,040 on Amazon trading. It only took me, say, an hour and 15 minutes. Well, how much would I have made had I actually lasted 2.5%, percentage an hour in the same trade, about the same amount of time? So let me go back to our calculations. Where's it at? Okay. All right. So now we're going to go on to, here's another Amazon graph of the entry, the breakouts. So entering Amazon here, this was like the last high of the day. So this is pre-market. Once the market opened, it broke out. And that signals for you to enter here when you breaks out previous high. Higher highs, you could break out, but that's a strategy for later. So looking at Square, same thing. You decide you want to trade Square because obviously you see it's a breakout, as you've seen on the actual graph. But you look at the delta. You say, okay, I want to trade in the money option. And okay, I have a smaller account. Say I only have $500. So I need to trade Square. I can't trade Amazon. You decide to trade Square. Well, you know what's breaking out and you want to hop in. So you choose 14 February because you're just scalping and you're going to be out in 5-10 minutes. And you choose in the money option. It only cost me $1.76. So times 100, that's $176. Your delta is 54. So you're going to make 54 cents per dollar move. All right. So if you calculate that, how much you can make, this point that we see in the graph is a $2 move from this point. Had you got in at the bottom and sold at the top is a $2 move. So if you calculate that, $2 times 54 cents is $1.08. So times 100, you made 108 bucks. So
54 times 2.
Huh? So what, $108 is what you made on Square. So you gotta think about your capital size versus someone else's capital size. Like you look at Logix and Money Man and Cumsteadt and you're like, shit, man, you're making a crap ton of money. I want to make that. But you can't really say you can make that money because you got to, in turn, have that money as well. You have $500, you have $1,000. You have to understand that you can't make as much money as them. And I can't even make as much money as them because I don't have that amount of capital. So you just have to kind of convert it into percentages. You have to tell yourself, hey, yeah, I didn't make $18,000, Chris did the other day, but I made the same. I made more. I made 2.58%. He made 100, a 1.83%. It's just a matter of his position size was bigger. He was able to buy more of Amazon or Tesla. So I know it's a little bit overwhelming when everybody in the group's like, oh man, you're making a lot of money. I ain't making shit. Man, this sucks. It's just all about your risk, your risk profile, and just managing your capital accordingly so you don't blow up your account. I'll tell you this, I blew up my account many times, and I always coming back and I'm bringing in more capital to figure it out. When I was trading cryptocurrency, I lost $80,000, off cryptocurrency scams, and if anybody knows crypto, it's just crazy run up all the way to 20K and then crash back down. I got caught up in all that mess, but you just keep grinding. You don't give up. You just keep pushing. So,
hey, bro. Hey, United, it's Chris. I just wanted to say a quick thing on that. I second that. It's really important that we keep our mindset to percentages here, not dollar amounts. I can't stress that enough with you. Watch your percentage. If you're up 15%, don't be afraid to take the profit, even if it's not as much as you're hoping for. Really base your trade and your end of week finishes off of your percentage, man. So I just wanted to piggyback that.
So that's that first topic that I'm gonna close is delta. Your delta is very, if you think if you're trading breakouts, and that's what Nexus Master does, he trades on a larger scale. He trades daily breakouts. So if you're sitting on Robinhood on 1 minute and 5 minute charts, you're not going to understand his philosophy when he's giving out signals. Daily breakouts mean that in longer term, it's going to go up overall. The trend of the market is overall up. Philosophy why he's so calm and collected when the price is heading down at a 50% ratio. And you're like, oh my shit, I just took a signal, now it's going down. It's because he's looking at daily and higher time frames. You're looking at smaller time frames. So if you're taking master signals, you have to understand it back at the charts, and you have to understand that there's always better entry points and exit points to get in. And that's why if you're not a chartist, you might want to get on TOS and start looking at the chart, or TradingView, like you see on this screen here. And it's actually a free account. You can build this whole thing set up right here off a free account. I've done it to people. And every time a signal comes out in any group by anybody, all you do is double check the charts. I'll tell you what, I never get in any signal without checking the charts. I always make sure, because on Friday, I got in Cumsteadt and Lulu, and I got in there on the 1 minute, and I didn't even look at the charts. And then next, I look at the charts, and it was headed already down. I looked back at Chris's signal, and it was already 10 minutes had passed. I was like, well, shit, that's what I get for not looking at the time. 10 minutes already passed. When you're scalping, 10 minutes is a lifetime. So you got to figure out your style of trading. So we talked about delta. I talked about your valuation of contracts, because the more in the money you are, let me go back to this other screen right here. Your contracts, you can see, is more valuable the more in the money you have. Why is your contract more valuable? Because it's more likely that your option is going to expire in the money, and you're going to get the contract for, of course, the payout. So, and that's why it's more expensive. And then it gets more expensive as you choose further out expiration dates. So as you become an experienced trader, you just have to weigh your options on what contract you want to choose. And what contract you choose is based on your style of trading. And this is why the point I want to drive to everybody is that you need to understand, you need to ask yourself, what style of trader do I want to be? And that is dependent on your lifestyle and your real life. How much time do you have free in your real life? So I just want to address that. And talked about delta, valuation of contract. Yeah, and talking about in the money options versus out of money options. Okay, so and out of money options, we already talked about. You're basically already kind of guaranteed that you're going to win as long as the price keeps going up, because options is all about volatility. It's all about moving up faster so you can make your money and you hop out. But the only reason why really people go out of the money is because they want to pay a cheaper premium. and they're assuming that the price is going to move towards that strike and eventually become in the money. Because as the price is moving towards your contract that you have out of the money starts building some interest, it starts building valuation, and therefore your out of the money contract starts profiting. You know, and as soon as the reversal happens, you'll notice how your contract suddenly gets cut in half, and all of a sudden it doesn't mean anything anymore, because that contract, you don't know if when it starts reversing here, like see this 5-minute candle, it starts reversing here, you don't ever know. It can just keep going down, you know, and your contract loses total value. If it comes back up, then the value of your contract comes back. But when you choose out of the money options because you're trying to be cheaper, then just understand that you're incurring more risk when you're doing so. And that's why, if you can, I prefer to just choose in the money. If you have the capital, just choose in the money options and take the higher delta, check the more valuation per contract, let this volatility hit, the price action hit, and therefore you'll be good. And you're making money right away. Okay, last thing I want to talk about before I turn this over to Chris is I want to talk about volume and price action, okay? When you do decide that you want to have your charts up and you want to start chart trading, then you bring up these charts and you use all these different indicators here. They paint a different picture. They tell you what's going on. This right here in the blue area in the middle is the stock RSI relative strength index and their momentum indicators. This down here is the MACD, which is moving average, convergence, divergence. Like they all got its own little course on what it means, and they all mean different. Basically, I use this for momentum. So if you can see that when these lines are at the bottom, you know, they call that oversold. When it's below here, they call that oversold. And I have a video on trading with RSI and MACD. You know, this is technical analysis videos. I have that posted in our video chat and also in our YouTube channel that I'll be posted again. And basically, when these are down at the bottom and they're turning up, you know, I know that momentum will start picking up and it will start reversing. So then I started looking up at these candles here, and I started looking up at what's going on with these candles. All right, you start looking at volume. So if you look at my volume, it's very important. See this orange line here? That's the average volume that is currently happening. And all these candles are above volume. That means when you have volume, that means it is followed by price action. That means something's about to happen, okay? So if you also, and this is when I start drawing my levels. See, I have pre-market data set on this. So I'll draw my levels here, pre-market if I'm awake. And I'll draw my levels down here. See, these levels pre-markets with all the institutional investors and bankers are trading in the pre-market and after hours. And they're trading stocks, they're not trading options. But they're trading with so much money, it's causing volume and movement and price changes. So I like drawing these here. So when the market opens, I use these as levels to buy and sell, because if it reaches past what it did pre-market or after market, I know there's money flowing. Plus I'm looking at volume here above the average. Plus I'm looking at my RSI moving uptrending. I'm looking at my MACD. Look at this. I'm looking at my MACD uptrending, right? See, from here to here, we had like a nice uptrend. From here to here, when the market opened, it had a nice uptrend. So if you just combine all those indicators and master these, and you use trading style, and this is what you do, find a rhythm, man, you're gonna be able, you won't miss this ever. These big old price movements, you won't miss those. Whether or not it's Amazon or whether or not it's Square. You can catch a Square. So if you have a small account and you're trying to catch Square, then you can catch it, because same thing here. We opened up on the MACD, we bull cross, and then skyrocketed here. Same thing at open for RSI. These momentum, they're the momentum indicators, man. They're very easy. Also, you can see, you get confirmations as these candles. So that's a little bit of technical training for you. And we can have more of that later on in other conferences. So, and that's all I got. I'm gonna go ahead. I'm gonna stop this recording so I can post this, and I'm gonna start another recording and turn it over to to Chris. So hold on, let me stop this recording.